How to pick stocks the FIRL way. As a disclaimer, none of what we say should be taken as financial advice. This is purely educational.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it.
Okay, MJ. So FIRL Pro's performance.
I think if you watch our videos often enough, you know that we mentioned this quite a bit.
Yes. So
right at the end.
Yep. And this is our August 2022 to December 2022 our performance.
Pretty fortunate that we've had these returns, but we'll be sharing with you today, I think, right? What some of the methods.
Yes, correct. So if you're interested in how we actually discover stocks or actually even make these kind of gains, right, it's because we have our own blueprint and also system to navigate and search for good companies and undervalued companies. So here is our secret.
Yes.
So the first criteria, market cap of 0 to 2 billion.
Yeah, well, it can be 0. I mean,
yeah.
Even certain companies starting with S, also don't have a 0 market cap. Okay,
maybe I should put that 1 million. 1 mil to 2 billion.
But so the whole idea here is that we want the companies to be small and the spotlight to be less. The way Malaysia works is that because we have a much smaller market, so what happens is that when something good happens, once someone figure out, right, it gets discovered very quickly. So you want to be ahead of the curve and you want to be in this, what we call the smaller cap or the mid cap space. The second thing is that this is one very big advantage for you, especially if you don't have any special intelligence or some super high IQ. The reason is because let's assume for a moment, right, that all the high IQ people are in the banks, the fund houses, whatever, managing those funds. And, most of them probably are there. They can look at a stock between 1 million to 2 billion market cap and they can identify it better than you that is a great company. They may talk to the management of that company, learn about them and have all this super secret access to information, and yet you can still do better than them. Why? Because their funds are usually very big, and so they can't really plow money into this kind of smaller companies. And number two, sometimes the funds rules itself, or what we call mandate, says no, you can't invest so small.
Yep.
So by law, they cannot compete with you.
Yep. That is actually well put over there. Actually, as a retail investor, you definitely have a lot of advantage against these fund managers. But the criteria number 2 we have here is very straightforward. It's just a clean financials. I think nothing to comment on that. If you want a company that is loss-making or doesn't provide you cash flow, I think those are the companies that you want to avoid. Or also companies that actually constantly raise money from either debts or even from shareholders. I think that should be a red flag.
So I think even with clean financials, it's not just whether, they're profitable and good balance sheet and all that. It's also simpler financial statements.
Yep.
You don't want that to be too complicated. Not necessarily if a company has complicated financials or messy financials is necessarily a bad thing, because some businesses are like that. Accounting rulings affect how clean accounts can look like. But by and large, if something is complicated, that's when fraud can happen.
And also sometimes it happens when it's oversimplified.
Correct. The reverse is true. But they don't give you enough.
Yes, details. So that is something for you to know. And the third point is that obviously the guy that is behind that is driving the company is whether the company has a reliable management team or not. If the management team is doing hanky-panky stuff or have a lot of issues, so for example like revenue grew hard, so there's a lot of internal issues right there. So those kind of things can actually affect the company's performance in the future.
And just to add on, I think when it comes to management, you are also looking at not just the integrity part, which is what you described, but also the performance part. So there are many, good integrity managers out there, but they don't have a track record or a history of performance. They talk about a particular project, they launch it, they say it's going to be really good, but then when you track the performance after 3 to 4 years, nothing really materializes due to can be all sorts of factors. So that's another thing that you want to take note of, right? Management is one. I think there are a few key things you need to look at. The first is their ability to find business opportunities. And then the second one, which is as important, is when they have these, when they have profits, how do they redirect some of the money? I think the best managements are ones that have both of these. They can identify good opportunities, and then when they get the money, they manage the money very well.
I think I like management team when they are actually under promise and over deliver. But that is actually pretty underrated lah.
And it's rare.
Correct.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
The fourth criteria we have here is exciting positive catalyst. I mean, if there is no catalyst around the company, right, of course, there's no growth in terms of earnings or even share price. So it has to be something that is very amazing that is going to happen to the company. Then only that what drives the company.
So the thing is, this is especially true for people who do what we call value investing, right? They find undervalued companies and then they, on paper, like it's very undervalued, but then the stock price might not move for a very long time. And the reason it doesn't move is because there's nothing there to unlock the value. Or, essentially you want to know what moves the stock, right? And catalyst is absolutely key. In fact, I would argue is more important than you deep diving into the business and understand all the little nitty gritty and different products, understand all 113 products. It doesn't matter. Right. That's stock market doesn't care. You just need to know enough about the product to know, okay, here are some of the basic drivers. And you typically only 2 or 3 drivers by and large, some more complicated, 5 or 6. And find out whether that's happening. And if it's not happening, even if it's undervalued, you move on.
Correct. Okay, and speaking about undervalue or valuation, obviously we need the margin of safety to be actually pretty attractive to us as an investor. I think that's the reason why we actually put a lot of emphasis on this to our FIRL Pro portfolio. So there's actually we minimize the risk actually pretty a lot, and that's why our upside is like pretty much taken care of. And that is basically how we do our valuation.
So linking valuation and catalyst, right? So I talked about how people go into low valuation companies, no catalyst, that can be bad. The reverse is true. So I think even if you assess correctly that there's positive catalyst for the industry, you want to prefer the company that will have the lower valuation, assuming the growth rates are the same. So imagine this way, right? Like imagine I'm going to use a crude example, a pretty good looking girl versus a not so good looking girl. If both of them can compete in the Miss Universe, they are presumably, similar in looks, right? I mean, everyone there have the same amount of looks, right? But you're better off betting on the girl who is not so good looking. That becomes the Miss Universe.
Correct.
Because the gap,
the odds,
the move to that is really great. And in fact, if people were betting on the Miss Universe, a lot of money will, logically be on the more good looking girl.
Correct.
So that is what margin of safety is. And now if let's say the girl who is more good looking did not end up becoming a Miss Universe, then there'll be a disappointment, right? Because she had the ingredients to do it on paper. But if the girl who is not so pretty does not make it, people are like, it's like expected, right? So in stock investing terms, it's, you think there's a catalyst, but you buy it such a low valuation that even if it doesn't pan out, it doesn't really move, it drops a little bit, and then you can just exit and move on. Find another go.
Yeah, that's actually a pretty good example to explain about valuation. But yeah, all of these ingredients actually help us to manage to get high returns in terms of our portfolio. And this is how we actually do it. If you want to know, if you got the time, of course, the best way to find companies or generate stock ideas is to actually screen the entire company listed in Bursa.
Yep.
Yes, so there's about 993
and this can be applied
companies.
to foreign companies as well.
Correct. And you want to screen through all of those, and then you just want to pick whatever industry that you can understand better, or even companies that you think that has an exciting growth. So that's your screening part. And then the second, basically how we actually generate stock idea is through fund management stock holding. So sometimes they buy companies that we never see before. And maybe we thought that this company is pretty bad, but maybe there's something interesting inside that they know, but we don't. So yeah, that's actually one of the ways to generate.
Look at the company. So when you read a typical fund management prospectus or fact sheet or info, whatever info they give on their holdings, pro tip is to look at the guys, the names below. Those are usually a bit juicier.
Yeah, that is true. Yeah, and the third and fourth point is basically very simple. Analyst coverage, families or even friends recommendation. Why sometimes family and friends recommendation can be useful for you, because maybe the company that you're working at is really very good. But they didn't maybe they know how it feels when you're working inside there. Let's say if they actually does have that experience. So yeah, they could be like your I would say insider information to get a feel of the company, right? So
but be very careful, because when you get family and friend recommendations, or they're giving you their opinion of their company, or they know through a friend or whatever, they're usually explaining it from the perspective of their working experience. So sometimes they may not like the boss they're under, or the pay is not the best or whatever. But that doesn't mean the company is bad. That doesn't mean the company is not a good investment, right? Now, it's a bit more, this sort of what we call scuttlebutt method, finding out about a company, is a little bit more relevant if you are a longer term share investor, where you want to ride and die with the company almost. Then it becomes a bit more important, because then now all the things that are important for the longevity of the company, like, the typical customer happiness, good Glassdoor reviews, or good, growth prospects for people inside there, it matters a lot more. But if, let's say, your time frame for investing is, sub 2 years or 1 year, then it's a lot less relevant. So you have to ask yourself what type of investor you are.
Okay, so actually that's about it. And this is just again our FIRL performance for December 2022. I think overall it's up about 15%. That's because of position sizing and also capital allocation. But basically, if you want to know how we actually find ideas or even generate, how we even manage to screen through all of them, you can actually find all of it in FIRL Pro. We do share our methods and analysis, or even like question that you guys have inside FIRL Pro. Everything we will answer over there. And if you want to know, if you are not convinced yet, but you want to know more about FIRL Pro or even SIB program, right, you can actually find our free sample, which we put the link all in the description and comments. So you can get free access to it and see it for yourself. And I think that's about it. Do you have anything?
No, guys, as usual, thanks for staying all the way until the end. We're looking forward to seeing you in the next video.